I think investors have been coming to Asia and will continue to come to Asia for one key reason, and that is that the potential for investment here is significant. I think Asia as an opportunity for investment is perhaps a little less mature than Europe and the US, particularly in distress. We're seeing the cycles in distress starting to play out more so now in Asia that have already been playing out in Europe and the US, in particular in the commodities sectors here. And so rising proliferation of cheap money, cheap debt over the last several years led to a significant leverage in a lot of corporations in Asia, and a lot of that debt is now becoming dues. And I think with Asia also, there's more of a growing recognition that there needs to be more of an early intervention in companies that are facing financial difficulties. And there's been a cultural, almost, if you like, reluctance to admit when there's things going wrong, particularly with large family conglomerates, with large companies in the region. I think as there's been generational change coming through those companies, they have been more willing to look at fixing problems, addressing issues, and looking to restructure and looking to alternative sources of capital and reduce debt. So what are some of the biggest challenges that investors are facing in the region with distressed debt and restructuring plays? I think there's two main ones. One is there's a less developed set of laws and judiciary in Asia than there is in, say, Europe or the US. We're seeing in, say, Southeast Asia and in China, where there is a set of insolvency laws, there are statutes that provide for restructuring and insolvency issues, but they're not as mature in their development, and you have a judiciary that is less experienced in dealing with these types of issues than certainly judiciaries in the US and Europe are. Secondly, it's also that there's generally been a lack of liquidity here, or lack of access to capital and finance in Asia than there has been in the US and in the UK. You see, for example, under a Chapter 11 system in the US, there's access to debtor in possession financing there. It's much that type of financing is much more prevalent. It's much more accepted over there. Here in Asia, there really isn't such an accepted regime as debtor in possession financing. Banks have been reluctant to lend in Asia generally because they have high regulatory thresholds, and they also are risk adverse. And so the market for restructuring and the market for insolvency generally has been turning more and more to alternative lenders. So how effective are restructuring and insolvency regimes in Asia Pacific? I think the preference in any event would be to, where you can, pursue an out-of-court restructuring. It's less time-consuming generally, it's less costly, the parties have more control over the process. But I think that's probably a little bit more prevalent in Asia than you'd find in the US and Europe. And the main reason for that, from my experience, has been that there's, rightly or wrongly, a view that the Asian, as a whole, Asian legal systems for restructuring and insolvency are less mature, less developed, have less expertise and are less able to cope with restructuring and insolvency issues than they are in, say, Europe or the US. There are instances where you do need to access the court systems in these various jurisdictions to use the toolboxes that are available to you under the various statutes. And an example is if you have, even if you have majority creditor support and you have a holdout of minority creditors, you may need to cram down in order to get a deal done. So where are distressed investors likely to find opportunities in Asia? I think there's probably two or three key areas that are presenting opportunities at the moment, geographically. The first, we're seeing a lot of activity in Korea at the moment in the shipping industry there. So with Hanjin and Hyundai Marine having encountered headwinds up there, there's been a flow-on effect into the shipbuilding industry as well with STX and other shipbuilders. Geographically, another area that's presenting opportunities for investors is China. From a distress perspective, we're seeing a rise in non-performing loans. We're seeing a rise in AMC activity offshore out of China. We're seeing a need for capital to be injected into China to offset the high debt levels that are rising there. And there's also just generally various industries that are suffering headwinds in China at the moment. The steel industry is largely being propped up. Steel manufacturing industry is largely being propped up by government intervention. At the moment, we're seeing distress in the real estate sector in China with falling prices. The most recent example of that is the Kaiser matter, which has provided opportunities for distressed debt investment there through the bond holding structure. There's also been issues over the last several years with the solar industry in China. We've most recently seen LDK Solar, which has again gone into liquidation offshore in the Cayman Islands as a bondholder-driven action.